How's everyone doing? All right. Hey, what's up, guys? Hello, hello, hello. All right, I think people have gotten their notifications now, hopefully. Let's bring down the sound a little bit. Oh, don't unmute it. Let's just make it a little bit lower. All right. Okay, so I want to quickly go over kind of the overall outlook for what the markets can do in the next couple of weeks and into August. So as you guys can clearly see on the stream, the title of the stream, I said the answer is in August, because the main question for tonight is, well, does the market correct, right? Do we have a market correction at all? Okay, so there are a couple things that we need to consider first. Okay, so from a seasonal perspective, we are supposed to top out around July, whether it be early, mid, or even late July. Yeah, that's unfortunately that's the only general answer that we can, actually not even general, the specific answer that we have, because again, you can't really time the markets there when you're really looking at a top or bottom, but you can get lucky as we've done before. But what I'm trying to say here is that from a seasonal perspective, we tend to see the markets topping out around late July. Okay, we just say late July for now, and we have a nice market correction, a textbook market correction about -5 to -10%. Again, the textbook correction percentage range is from -5 to -10%. That's what you define a market correction, and then greater than -10% will be a bear market. Okay, especially if we start to hit -20%, right? So double from -10. So yeah, so we tend to top out from late July all the way up into around, I would say around like late September, early October. That's when we start to see the price kind of starting to base, at least show signs, kind of a behavior of consolidation. There might still be lower lows and lower highs being made, but there'll be less momentum to the downside and less selling volume. Okay, so that's the usual seasonal pattern that we have. Now, we also have what we like to call Trump's seasonal market pattern. And when we take a look at his first term, you can see that even during midterm election years, right? On midterm election year, obviously we don't have too much data to go off of, but during his presidency, during his term, markets can still go up pretty dramatically, even in the supposed summer lows, right, where we see the market correction in most of the summer months, as usually institutions and retail traders tend to sell in May and go away, right? And that's kind of what happened even this year for now too, by the way, where we reached new highs all the way up into June. And then June is when we actually saw some major pullbacks, and I believe it was a near correction as well. Let me see here, the lows from the top. I'll just do a general. yeah, so we did reach a very brief. Oh, actually, I don't think. I believe this is a fluke here in the price here, but either way, yeah, we reached a pretty textbook pullback. I don't exactly remember what the actual bottom was on June 26th, but I do remember that this was a very off. We had a kind of a phantom print here near the close. So I would just say I'll just use this low. So yeah, we're basically a textbook. We're on the cusp of a technical textbook pullback. A correction, right? So most of this has already occurred for the month of June. So all this consolidation it very well could be signaling that we're going to follow exactly what the previous president's term, right? The seasonal pattern of the previous term of Trump. So, you know, that's one factor to look into. But again, there's another different factor to look into as well, which is the fact that for a seasonal trend for midterm election years, things can get a little bit tricky, is what I was saying, for the summer months, all the way up into late summer and all the way up into early fall as well. So again, there's a lot of different things to consider, especially for the next few weeks and next few months. But let's dive deeper into what I've just told you guys, because we potentially have a previous moment in time where we can look back and see what we can expect. And I know I've been saying this for multiple times now, but 2023, okay? Is everyone with me so far? Okay, good. All right, so I know I've just mentioned 2023 here and there, but I just want to give you guys this this little deep dive here, because back in 2023, if you were a reader of the CFO Sterling Watch report, which again, you guys will be a member of the private CFO Discord chat room as well, we absolutely nailed this potential correction that we were looking for heading into mid to late quarter 3, and obviously into late quarter 4, into quarter 4 as well. So this was a pretty textbook correction too, as a matter of fact. So if you guys take a look at the highs in June, so before we dissect what happened exactly here, let me take this away for now. Okay, so this was the high in late July. Okay, and if we, hey, what's up guys, welcome in. Oh, there's a lot more people coming in now. Hello, welcome. Okay, so for anyone who's just joining us now, I've only been live for about 10 minutes, so if you guys want to just go right back to the beginning, or around, I would say around the 3-minute mark, you guys can, and then catch up and then come back to the current live. But again, you guys can always watch the replay. All right, so this from the highs to the lows, all the way up into, okay, October 27th. So June 27th to October 27th. July 27th. Okay. So this was exactly, so July, August, September, October. Okay. So this was clearly a textbook market correction, right? Do you see it here? Right, negative 10.98%, or you just want to round up, negative 11%. And during this entire correction, right, for again August, September, and October, for 3 months straight, exactly 3 months at that as well too, right? From July 27th to October 27th. Okay, there was a lot of volatility, not just to the downside, but during the actual bounces that happened, there was some very rapid moves to the upside that definitely took out a lot of shorters and short sellers who were, well, short. and obviously there's a lot of bear traps and bull traps simultaneously, which is what makes this period, this mid to late summer period, extremely hard to navigate. And for us currently, June has been that month, right? But that leads me to believe that if June was already a pretty hard month for both sides, and the fact that we are still expected to see some sort of a move up higher into, at the very least, this month's OPEX, which is coming up this Friday, it leads me to believe that we still have more highs to see. I don't know if we're going to see new all-time highs, but at the very least, we can see a retest of the current highs, right? Current pivot high points. Maybe you might go and retest the current all-time high price print, but to be a bit more realistic, I can just say that we can at least see some previous highs being retested. Now, the reason why I'm saying this is that, well, if we are to put exactly what July of 2023 did, the performance of July 2023, we can clearly tell that June to July, that there's obviously some larger pullbacks, but the overall trend was to the upside, right? I mean, that's pretty much what happened here. Where's my brush? There it is. Okay, so all the way from here, okay, clear uptrend. But what really is piquing my interest is what happened after this year's and this month's OPEX. Well, we actually drastically, significantly moved up higher into the OPEX, and we continued to move up higher while tightening up and consolidating. But at the same time, during that entire period, we've also made higher highs as well. So again, even if there was a pretty solid uptrend here from the beginning of June to the end of July, there was still some pretty wild candlesticks. I mean, just for this candlestick here, right? On July 27th of 2023, we saw a pretty massive bearish engulfing candlestick, and that was kind of, I would say that was the major sign. That was kind of our little blow off the top event. And that leads into my next segue here, because I have been calling for a blow off the top event as well. If you guys are a reader of the report and a member of the Discord, you guys know I've been looking for a blow off the top event. And the reason being is that, well, what I'm looking at here on 2023's performance, right? So I would say that this blow off the top event still has to occur post July OPEX and post expiration there. So, you know, don't expect to see some wildly massive, you know, candlestick like we saw here, but rather kind of a gap up event that leads into a complete gap fill. Okay, I mean that's what happened here, but obviously the ranges weren't too drastic as what we're seeing now. I mean the volatility here so far in this year alone is quite dramatic, right? I mean, look at these massive moves up higher, massive moves down. Okay, so you know, I think this potential market top, if you were to see one, is going to come out of nowhere, most likely. We're not going to get as much a clear signal that we saw back in July of 2023. And the fact that we're seeing kind of a similar action where we're coming out this June consolidation period and we're starting to kind of poke our head out a little bit into July, tells us a lot, because again, even just based on what we saw in June of 2023, leading into early June and mid-June, we saw that breakout, that nice fresh breakout. And so far, we're starting to see the same type of activity. Yes, obviously the candlesticks don't look the same, right? I mean, that's pretty obvious. But we're kind of seeing the similar price action and price trend that is mirroring this year of 2023. So again, that's the major reason why I keep on harkening back to 2023. So, you know, when it really comes into market corrections, right? It's usually you don't really expect it to come, obviously, right? But when it comes to seasonal trends though, which the market has been actually following this year, I really wouldn't be surprised to see July ending positively, and then as we head into August, that's when we'll be seeing that potential gap down, and that new pivot to the downside, and more momentum for sellers to occur. Because again, there's a lot of people who are still very much yelling at the top of the lungs that the markets are going to crash right now, this month, this week, right? And usually the markets will not do what a lot of the loud people are saying, right? It's usually going to happen when most people aren't bearish, right? Or most people are really not really focused on being bearish. So it's going to matter a lot when a lot of hedges are going to be taken off. That's exactly what we saw in the last half of July, by the way, of 2023, which kind of really drove prices up higher and continued to give us this really good amount of strength and really pull us away from both of my daily 10 and daily 21 SMAs. Right, so this red line and my light blue line. Let me drink some water, guys. Ooh, sorry guys, I had to cough. Okay, so as I was saying, we saw a lot of a lot of dealers, and just overall the hedging that happened as we head into June. We really saw that type of hedges being taken off. That action alone kind of drove markets up higher. So, that same thing, right? That's the same incident that we saw occurring in 2023 can occur in the last half of this month, even though a lot of people may not believe it. Because again, there's still a lot of people out there who are still expecting kind of that sharp reaction move to the downside, especially on a week like this week, right? Where we have a bunch of economic catalysts and data coming in. And again, a lot of geopolitical tensions rising once more in the Middle East, right? So yes, we have a lot of macro factors and macro perspectives to worry about, which again is going to matter in August, right? This is my timeline so far. I'm giving you guys the answer here because the answer lies in August, right? But I really think that this type of a correctionary event is going to hit when no one is really expecting it, right? And we're going to continue to go up that wall of worry into late July, just like what we saw in 2023. And I don't know if you guys don't remember this, but I don't know if you guys will remember this, but excuse me, guys. This entire correction, people weren't really understanding what was going on, why the market was correcting here. And it was only after the fact that people realized that, hey, the markets were essentially not believing in what the Federal Reserve had in store for their monetary policy and interest rates. And it just felt like the Fed was looking too far ahead for rate cuts, right? And the fact that they're not looking to okay, I think we're back. Okay, I think we just cut out a little bit there. Yeah, we cut out. Okay, yeah, I hear my Microphone now there. Okay, perfect. We're back. So as I was saying, all those macro factors lined up perfectly with seasonal trend patterns, which is the reason why we got quite a very nice textbook correction, right, of negative 10%, or again, negative 11% to be exact. So, you know, I'm not saying we're going to see this exactly, right, because again, June was rather already a pretty volatile month, right? I mean, if you just go all the way back here, okay, right, June was already a pretty volatile month. I mean, it would make sense if both sides are already pretty tired of this back and forth, right, the seesaw-like price action, and I'm pretty sure bulls, on the other hand, would love it if this resolves up higher, and that's exactly what I think could happen here, especially even if we have such a catalyst-filled week. And again, as I've just said before I got cut off here, it's like, it's too easy, right? It's just too easy to point the fingers at everything this week and say that, yes, this is the event that will cause the markets to tumble this week, right? Including as we head into July's OPEX, which is this Friday. So I really don't think that we'll be seeing any type of a large move down unless we have some of this Middle East tensions coming in. Like maybe there's a drastic change in that area there, in that region, but I highly doubt that. I'm pretty sure the current person sitting in office right now in the US is not really wanting something like that to happen too, because again, it's been widely known now, right, that he's been trading a lot, or at the very least his family, whoever is controlling his account there. But disregarding that, it just makes sense, right, that the markets will try to move in a way that will completely bamboozle both sides, but most importantly, the people who are really extremely bearish, even after we've seen a pretty solid consolidation period, right? So now, based on what we've seen with 2023, right, where we saw some very nice previous highs and previous lows, right? So we really navigated this downturn well, if you guys remember. I would say though, I think in the last, around the first few weeks of October was good, but they were pretty good. But I remember personally me struggling a little bit back here as the markets pulled even further, getting us into into that actual market textbook territory, textbook market correction territory. So so we were able to navigate this pretty well so far, right, in 2023 from what I remember personally. So, and I also remember nailing, we absolutely nailed the pivot point that really just ended the market correction in October here of 2023, and eventually into the transition into November. And I also correctly predicted, even before 2024 came around, that in the I believe the late Q3 of 2024 or early Q4 of 2024 will be our first rate cut. And guess what? Our first rate cut came in September of 2024. So I got that right too. So 2023 to 2024 was absolutely an amazing gift of me just giving you guys some very nice technical analysis and overall macro analysis as well too. So if you guys remember that. So the only problem with that now, right, is that set a precedent, but that alone will not help us this year. Okay, so I think for us this year, it's just essential to really look out. Yes, we know for the fact that we are extended, right? I mean, just take a look at the monthly. Take a look at the RSI. Oh, this is the RSI 5. Let me actually change it to the. Okay, we'll change it to that. Okay, the usual, right? The monthly and the weekly, okay, they're both still in kind of the overbought areas. But again, this consolidation period so far for the entirety of the month of June, so 1 month of consolidation, has resulted in pretty much nothing, right? For the last 2 months, we haven't really gone anywhere. So I really wouldn't be surprised if we, again, headed up higher, right? Headed up higher into the previous highs here, right? And the previous highs, like even just most recently on July 10th, so last Friday, and the high here on June 15th. And obviously the ultimate previous pivot high point that we can retest will be the all-time high price print of 760.40. Okay, or $760.40. So yeah, I mean, even the curling of my daily 10 and daily 21 SMAs are pretty solid here. It's supporting the price up higher. I mean, there's that. And so far overnight, we're having a nice little positive move to the upside. And even though we're about to get even more words from Federal Reserve Chairman Kevin Warsh as he continues to testify into day 2 to Congress, and the fact that we also have PPI inflation data, and that's again, that's going to be very, very important because the PPI is actually the leading data for CPI, by the way, right? This is the producer inflation, right? The producer prices inflation there. So, you know, I think let me actually look it up. Yeah, so just like what we saw with the CPI for the month of June, the consumer price index, the producer price index, PPI, can actually show a little decrease again too, because again, we actually beat expectations, which is actually a little bit of a warning sign, by the way, guys, because let me give you guys a quick lesson on inflation. So if you guys didn't know, the expectations, the future expectations of inflation can actually be a major driver of inflation itself. I know that sounds crazy, right? But this is what I learned from my own economics teacher back in high school. He made it a very, very good lesson, and I still remember that. So the actual consumer expectation of future prices, if that's high, then the current price of goods and services can actually move up to meet those expectations, right? So that's the reason why the Federal Reserve even exists, to kind of make sure that inflation doesn't become runaway inflation. Remember runaway inflation, guys? We had that word stuck in our heads back in, I think back in like what, late 2021, early 2022, right? So what I'm trying to say here, and I'm trying to tie this into now, with this sudden drop, well, I would say quote unquote drop, I'm putting air quotes here with my fingers, is that this has a huge implication on what we can be expecting for future inflation. Does that make sense, guys? So as the current expectations of inflation has kind of leveled off and died down, this actual drop in the CPI can actually drive future expectations of inflation again. Why? Because we're starting to see the conflict in the Middle East flaring up again, and we're still seeing higher energy prices sustained across the board, even with crude oil prices down as well. Right? Grocery prices will continue to go up, and supply chains won't come back as easily as they were before we saw the Strait of Hormuz being closed, right? Or before we saw the Strait of Hormuz closed. So again, I made all these videos before too. I made a lot of short videos on this subject as well. Because remember the shorts on grocery prices, right? You guys can find it on my channel here. Just go in the shorts tab, and you guys will just have to scroll down a little bit, and you guys will see it there. Okay, so you know, that's the problem with this CPI report that we saw today. Okay, so don't forget that, right? The future expectations of inflation is actually pretty important, even if you guys might think it's not that important, right? Because again, we're getting the month-to-month data, so why do we have to look at the future expectations, right? I mean, that logic does make sense, but this excitement over this big drop, again, the expectations compared to the actual numbers last month was already pretty low, but the fact that we've actually beaten those expectations is kind of a warning sign. Okay, so again, the forward-looking, the future expectations of inflation can start to jump back up. So we need to be careful there. And that can actually be a driver for a potential market correction in the summer, right? In the late summer into August, right? So again, completely different different set of conditions that we have from 2023, right? And obviously what the Federal Reserve is facing now. So with the labor market, right, jobs growth, and inflation, right? So even today with Kevin Warsh's statements, he is surprisingly staying hawkish. And if you guys remember what I told you guys about what Kevin Warsh was and what he did before, you know that he was a pretty much a hardliner for hawkish monetary policy. So it's kind of surprising to see him stay in character there after being nominated by Trump. So if that is indeed the case, if he's actually going to carry out what he testified to Congress, right, under oath, the markets can really become scared of that, and especially with potential runaway. I'm pretty sure this doesn't even exist, but I'll say it now for myself because it makes the most sense to me. But the potential for a runaway future expectations for inflation. Okay, because again, the actual inflation numbers can go up to meet those expectations. All right, so again, the Federal Reserve seems to be very, very stringent on making sure that doesn't happen, obviously. I mean, Kevin Warsh himself stated that to Congress today, right? And I'm pretty sure he's gonna double down on that tomorrow as well, especially once the PPI numbers are out as well. Early morning pre-market tomorrow at 5:30 a.m. Eastern Standard Time. 5:30 a.m. Pacific Standard Time or 8:30 a.m. Eastern Standard Time. Okay, so yeah, I think we still have kind of that quote-unquote blow off the top event. Maybe it's going to be a more of a drastic event than what we saw in July 27th, 2023 that I've just shown you guys. But if you were to, again, see a blow off the top event, we still have a couple more days to go here. All right, I would say post-OPEX is probably the best week for that window of weakness to truly appear. And obviously we've just had a completely wild past couple of weeks and past month, right, of this wild up and down seesaw price action. So it would be nice to see a nice final push to the upside into OPEX and into post OPEX, where we start to see more people becoming more cautious and potentially just not bidding the price up higher. And once that occurs, I'm pretty sure that will finally introduce some shorts who have been completely kicked out during this entire consolidation period, and also this impending potential move up higher into new highs or into just retesting previous highs. Maybe they can start coming in, and we can ultimately see that low volume blow off the top event. where again don't see any buyers, but we start to see a little bit of selling volume coming in. Okay, does that make sense? Oops. So yeah, hopefully this stream was helpful, but you know, I really wanted to give you guys why I keep on harkening back to 2023 and why it's kind of relevant. Yes, obviously the macroeconomic perspective there was completely different, but not that different, because again, inflation is still the problem. But you know, we have this new geopolitical event that we need to price in as well and look into and consider in the Middle East. So yeah, I mean, and the fact that we've had this really dramatic push down in inflation numbers here, and we have to see what PPI is tomorrow too. And I'm gonna assume, based on what CPI data said today, I think PPI is also going to be pretty low, and it's probably going to beat expectations as well, which again, its own expectations are also lower than the previous months. So I mean, there's that, right? And maybe even a meeting of of the expectations is going to be good too, because again, that's also another drop from last month. So again, it's kind of wishy-washy here, I would say, at this point with inflation. But the fact that we're seeing this dramatic decreases and drops in inflation is kind of sending me warning signs, guys, to be honest here. And again, what I've just told you guys about the future expectations, right? The forward-looking expectations of inflation. Does that make sense? All right, well, that's it for tonight, guys. I mean, I just wanted to give you guys that kind of brief outlook there, and August really may be our only chance for us to see an actual market correction, or else if you don't, well, we will trudge on up higher. We'll just continue to go up higher and higher and higher until, well, until something happens, right? But I really need to see some sort of market correction happening here, because we are still pretty much extended, right? But again, like I've said this entire stream, do not expect it to happen this week, just because we have a plethora of multiple catalysts and events happening, right? From an economic perspective and from a geopolitical perspective, right? That just seems too obvious for market makers to just snap the price right back down and completely taking out the bidders and buyers of the market. Right? That just seems too obvious. All right. So with OPEX at hand here, and the tribulations of OPEX at hand here, I think the markets can continue to go up higher. Okay. All right. But again, just watch for August. Just that's my little hint there. All right. Okay. Well, that's it for tonight, guys. Quick little stream here, about 40 minutes. If you guys are interested in becoming a reader of the CFO Swing and Watch report and becoming an automatic private CFO Discord member, okay, just check out the description box down below using the very second link, and it'll provide you all the information and details that you need if you guys are looking to become a reader of this CFO report that I talk about on every single stream. Okay, so again, it's a weekly stream, well, it is a weekly stream, but it's a weekly report that gets sent to you every single Sunday night, right? And we have many discussions and trade ideas in the CFO Discord as well. So again, you guys can choose to not be a member of the CFO Discord by not, well, coming into the Discord. And if you just want to read the report, that's fine, right? Just be a reader of the report, that's completely fine. But yeah, I think that's it for me. Yeah, I think that's it for me and for me. I will see you guys maybe on Thursday night. Since I had some technical difficulties yesterday, which is the reason why I didn't do any live streams yesterday night. But maybe I'll just see you guys tomorrow. Yeah, I'll see you guys tomorrow. All right. So on the usual time, right? Usually I do my streams Monday and Wednesday, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Again, Mondays and Wednesdays. So tomorrow I'll see you guys at 8 o'clock sharp, right? Pacific Standard Time. And yeah, good luck tomorrow, and I'll see you guys tomorrow night. Have a great rest of your night, guys. Thank you so much for watching.